Ta-da! Hello? No. 1, 2, 3.
Sorry. So maybe?
Yeah. 1, 2, 3. It's working? No? No.
Gar nichts. Aufnehmen.
The device tied, so I can imagine what about people, particularly after lunchtime. Yeah, and Steam is working. Okay, so dear colleagues, we have survived after lunch break, and I would love to continue a really important questions which we already raised on the previous sessions regarding opportunities, challenges, risks, and right now I would like to introduce that we will speak about financing and about investment and renewables and risks and how to mitigate this risk. And I would like to highlight that this panel is a really unique panel because we have both sides on one line, financial institutions and private companies. Usually they're on different sides of negotiations on the table, but now we are all together, and it's a great chance to you to kind of get insight from the first hand and all on how actually to attract investment. And before we start, I would like to make a cycle of introduction, just briefly introduce yourself, who you are, what company you represent, and about what you will speak today. Just one round.
Yes, hello, my name is Peder Larsen, and I'm representing IFO, which is the Danish ECA, and basically I'm representing the Ukraine fund within IFO. So what I would like to talk about today is how we do fund projects in Ukraine and what we're made there, and of course with the focus on energy projects. Personally, I've worked within energy projects for the past 15 years, but mainly in North and South America. So.
Hello, my name is Mykhailo Chulkov. I'm director of the company EuroCape Ukraine. It's a part of the Longwin group. We create the renewable projects. We work in France, Poland, Western Balkans, and Ukraine. And I will speak a little bit about Ukraine projects and the need of finance for Ukraine projects and how they survive.
Thank you. Hello, everyone. My name is Oleksandr Melnyk. I am head of corporate and M&A practice at GOLAW law firm. It's one of the leading Ukrainian law firms. We provide solid legal assistance to business, both international and Ukrainian, and energy is one of our key sectors. And today I will be speaking about how to prepare your renewable energy project for attracting financing and what is bankable project, how it looks like, what do you need to do in order to become a bankable project.
Yeah, hello everyone. My name is Polina Korchak. I am head of finance of DTEK Renewables. So we are a Ukrainian-based company who creates renewable projects starting from greenfield development, construction, EPC, and finishing with operation and maintenance. And I will talk about financing of new projects from the business perspective, as we have certain experience in construction of the projects during the war.
Thank you. Good afternoon, colleagues. Slava Hordiyenko. I'm representing International Finance Corporation. I'm part of the Europe infrastructure team covering Ukraine and South Caucasus, and I'll speak briefly today to introduce our Ukraine program. And some of the aspects on how we work around the challenges in Ukraine. Thank you.
Hello, my name is Charles. I think we've met already this morning. Nevertheless, I present myself again. I work as a policy officer inside the Director General of the Commission in charge of enlargement and the neighborhood. The neighborhood goes from Morocco to formerly Belarus. It is now, Belarus is now out of it, suspended. Nevertheless, we work on neighborhood, but we work especially also on enlargement. And when we speak about the neighborhood, when we speak about enlargement, there's been a tremendous amount of importance given to Ukraine, rightfully so. And so there's been a directorate, a specific directorate created in the Director General for Ukraine. And I'm part of this directorate in the interinstitutional and coordination team. Voila. But specifically, I'm working on private sector projects and public sector projects, but mainly in renewables, in energy, but also in capital markets. That's another topic.
Yeah, thank you a lot. And before we start, I would like just to highlight the current situation with the real needs of energy. If you can put a slide, one slide, with the energy needs, which is, yeah, right here. So the total recovery needs of Ukraine, particularly in the energy sector, is estimated over $50 billion, as you may see. And today we will elaborate, it's on the right side. On the left side, you see the kind of directions in renewable energy where Ukraine would like to kind of put the efforts, and European Commission definitely support us with these efforts. And between needs and directions, you can see the QR code. It's a QR code for several projects from local communities and municipalities for the total amount, $1.5 billion. It's not enough, but it's a small piece of project pipelines which Ukraine has. And today we will speak more about project pipelines. We'll speak about more financial opportunity, how to feed these needs and demand. But I would like to start from Ukraine facility. I would like to start from Ukraine facility and importance for a recovery Ukraine, and particularly, like Charles mentioned today in the morning, that we have 20% dedicated to renewables, right? And a couple of weeks ago, a steering committee approved 2.75 billion for different types of instruments. Everybody knows about these numbers, but it would be really great to go deeper into the details, how this money works, how to apply, what funds should do to apply, what corporates can do to participate in this program. So, Charles, I would like to give your floor and looking forward to hear your insights, actually.
Thank you. So indeed, I mean, I'm not going to put again the slides of this morning up, but this idea is basically to try to trickle down from the headlines of the 50 billion to say, okay, what is now available? What can people submit to? And what can we actually do with partnering financial institutions? And I have one on my right, so that's going to be an easy case study. True as well. True as well. IFU, so the sister organization, is pillar assessed. So what I wanted to say to you, so pillar 2, so we start from the 50 billion. You know that a big chunk of it, 38 billion, goes basically to pillar 1. But pillar 2 basically is left with a very important envelope of 6.97 billion. 6.97 billion, this is the money that basically we've been allocated to. But we can do more than that. And why can we do more than that? It's because we try to do leverage. And we try to do leverage first on our own money. So that's meaning saying, okay, if we do budgetary guarantees, we know that statistically not all of them are going to fail at the same time, and probably not all of them are going to fail. So that meaning that we can basically have already a first leverage there in internal cuisine. Then we're going to have a second leverage. And maybe this is interesting to try to pin it with the slide that I have in the back of here, is that we want to cover proposals with skin in the game and leverage from the implementing partner, but also from the co-investors. And here I've created, and this is normally for the audience that applies, so you really see here the technical kind of slides about the kind of stuff that we can do. So if we imagine renewables, so now you've got this Pillar 2 Ukraine investment framework ongoing, you've got this 12-month call open, 2.75. You say, well, I've got this pipeline of fantastic wind farm and solar panels, and I want to give it a great name. I want to say it's Ukraine greenest fields. Okay, you want to do that, and you are actually a consortium of players in Ukraine in that field. You know this project, you want to find financing for that. You go to the known suspects in the field in Ukraine, which have been there for a long time. So you go potentially to EBRD, you go to IFC, you go to IFU, you go to all the players that are pillar assessed, and you pitch them the project. They find the project very interesting, and they say, well, we can invest a bit of our money, we can try to find other co-investors, you maybe as promoters yourself can invest a bit as well, but I mean, it's not really making the cut because the risk is very high. I mean, commercial returns, fine, they will be there, but there is a downside that can be really huge, is that you get bombed on those fields, or that you basically have such of an economic downturn that this project is not making true anymore. So we are not here in the case of, let's take my country, in the Benelux, where wind farms can be basically put outside of the ground very easily with only private money. This is not the case yet in Ukraine. We hope to get there, but sometimes there need to be a signaling from the public authority, either from the Ukrainian side, surely, but also from the financial power that the Ukraine facility is. And it's all about signaling here and de-risking. It's all about saying, hey, guys, this is feasible, let's do it together. And how can we do it? Well, then you've got this beautiful pipeline. Let's say it's a pipeline of 200 million of projects. And you basically convinced, and I'm going to take my colleague here from IFC, you basically convinced my colleague from IFC to put 100 million of IFC money there. Okay, IFC comes to us and say, oh, maybe the 100 million we can fund it, but we don't want to take the downsides on it. So they come to us and they say, oh, could you actually cover, let's say, 50% of that? We say, okay, this is already making some kind of key metrics. Can we create together a guarantee agreement, a huge bucket for 200 million with a couple of criteria on what can be included in it, financially, but also policy-wise? What are we going to do public procurement-wise? Are we going to take all of the players? We want to probably focus on the Ukrainian players. And then at that moment, we can start discussing about a guarantee agreement. Before discussing about a guarantee agreement, you need to submit the proposal. And that can be done only by those eligible financial institutions. So IFC knows the process, has been briefed, sends us an application form in a very exhaustive template, and says to us in the annex, we want to do something like that, a first loss piece. We want to do 200 million overall. It's going to be small tickets of 20 million each, so we're going to do 10 of them, and we want, on average, that you come in for 50% of our investment, which is basically 100 million. So we come in for 50 million. That's an eligible investment. And so what's going to happen then is that we're going to go into assessment internally at the Commission. Do we want to do this project with IFC? Policy alignment, it makes sense. Do we have the capacity to do it? Do we still have headroom for 50 million? I can tell you we do. So we basically decide to go into that process. We go into that process, we find points of agreement, we basically have on our side to say hello to all the colleagues from the other directorates and services in inter-service consultation. It's internal cuisine, but that gives you an insight of why sometimes we're not the easiest and the fastest to deploy. Nevertheless, everybody's agreed, we go on the table. What happens then is we got the bucket. We got this beautiful bucket where we can put renewables. IFC then has a pipeline and finds a project in Lviv. And they basically say, okay, we got a 25 million project there. can you do it, Commission? Yes, we will. Yes, do put it in the bucket, and that's one of the projects that gets submitted. If this project in the foreseeable 15 years goes down, at that moment, we will actually, IFC will submit claims to us, and we will honor those claims in order to actually make true on the losses that have been done, and this in the agreement that has been done. So this is the first loss piece that you see on the left. Second loss piece is basically someone saying, hey, I can take the first loss. I can be the one losing my money first. I can be the one honoring the claims if they come. But I want the Commission to basically come second because I want them to cover the private investor. We are not there only to cover the money of the development banks. That needs to be said out loud. We can cover the money also of your co-investors. If you manage to do syndicated loans, parallel loans, EBRD has been fantastic at doing that in the past. We can actually cover also the co-investors. And then there is the pari passu. That's very easy. So you lose 10, we lose 10 as well. That's the idea. What we like the most is as far as I'm concerned, financial engineering-wise, is to try to be as anchoring as possible, as signaling as possible, by being the first loss taker and really say, okay, that tranche, nobody wants to take it, we take it, but that means that we have a huge leverage above. So you want to do 200 million on that, but you need a 50 from us, that's fine, we already get a 4x multiplier. Because at the end of the day, and that's looping back to the Ukraine facility, to those big numbers, we want to do 40 billion investment with actually the 7 that we've got from the guarantee still available. So that is a bit of the pitch about de-risking and how the Ukraine facility can do that. That was about guarantee. We can do blending as well. But given that we're speaking about renewables in a country that has tremendous potential for renewable and for the commercial viability of that, I think guarantees is an interesting instrument to talk about. Thank you.
Yeah, thank you a lot. And just a quick clarification. So what is your expectation regarding distribution of money between private investor and guarantees and limited partners? Do you have kind of some ideas?
So, yeah, a good question. So, and you see in small there, minimum 10%. So what we normally request is for the implementing partner to retain 10% skin in the game. So that means being either junior or pari passu to us in a first loss piece. So if we lose 90, that means that basically the IFI needs to lose 10. This is just because reduction of moral hazard. This is not the big chunk of the leverage. I mean, if we only stopped at this 10%, we would have zero leverage close to. The leverage that we need is those private investors in the gray just above. The leverage that we need is that the implementing partner basically says, oh, I want to do the first loss piece, or if I do pari passu, I'm not going to ask you 50-50. You can do 20, I do 80. Those are the places where we can get the leverage, and we are very, very attentive to that.
Yeah, I really appreciate it. And it's really insightful information because I watched many presentations from European Commission regarding Ukraine facility, but it's the first time when it's so detailed and so well explained, and much appreciate.
Thanks.
And so the next round will be insight from businesses, from companies, and I would like to hear maybe from Mykhailo to start first, that you're working with a project on an early stage, right? And it would be great to hear your experience on how to secure financing and what obstacles exist from your point of view, and actually some recommendation how they can be overcome.
Yeah, thank you. So we in Ukraine, we have 2 projects. First project, it's a big 500 megawatt wind, and we were successfully commissioned these projects in 2021 with 100 first phase, and these projects were very successfully generate energy for 9 months until it was occupied by Russians with the full-scale war. and currently it's under occupation. So, and second project we started during the full-scale war in 2023, and now we are continue developing and expect to be ready to build end of next year. So, very often the question is like, why you stay in Ukraine, why you start new projects? It's so risky, it's so unusual, but for me it's kind of easy answer, because when you see the capacity, so like you see the 56 gigawatt generation capacity of Ukraine in general, and you see the during 15 years renewable energy sector was able to build 8.1 gigawatt of solar and wind. And you read these reports from International Renewable Agency, who said that the capacity of Ukraine is 400 gigawatt, which is like 8 times bigger than need. And you read the Greenpeace report, who said that you need only 1% of the land, which acceptable for the renewables, just to fill your Ukrainian energy production needs. And so having all this in mind, you build your plans with the idea that Ukraine should be the platform for the Europe energy platform, or at least to take big portion in the European energy market. So, being a project developer, I always look at this topic from the project planning perspective. And project planning said me that from 3 to 4 years for development, and from 1.5 years for construction. So roughly 5 years for the project. And we can see that during the war in 2023, it was 3 projects commissioned, totally 200 megawatts, which tells me that the development started in 2018, 2019 probably. And in 2024, we have also one project of wind commissioned. So development started in 2019 probably. And we have on the market still some projects, quite nice amount of projects, who are ready to build or near to ready to build. And so they will come for financing in the next maybe 2025, 2026. But what next? If we ask this question, so if we want to finance projects in 2027, 2028, 2029, we need to start project like yesterday, or at least today. And this is the main challenge. And in my opinion, it's not enough the products from financing side for the project development, because we all speak about financing, meaning that financing of construction, but without someone start the project, it would be nothing to discuss. And the issue could be, it's the project developers, they can without having the financing, they can save money on development side, try to be fast with, or at least less expensive during the development, and to achieve RTB. And then when the projects are under due diligence, it can be not at the quality which expected by IFIs. And they come back, they need to redone some monitoring, some permission, some design, and it takes another 6-8 months and means delay the project. So yeah, so that's my message today, that we should pay attention not just financing of construction, but also think about financing of development, and find more mechanism, grants, as an option for financing development. Thank you.
Thank you a lot. And just continue with the tech, and to share your experience in overcoming obstacles, and about what are you doing right now, what is your project pipeline right now, and actually your experience and your recommendations, what should be improved.
Yeah, so first just to feel the context, where is Ukraine now? We are in the 3rd year of full-scale war. So which means that it's a challenge by itself, and except that we have other challenges like electricity and energy shortage. So like for our modern people, it's difficult to imagine how to spend, let's say, winter night without light, without heating, sometimes without internet, because your utilities don't work. So we all became like a little bit electricians. Today we talked about, on top of that we need emergency repairs, right? But on top of that, we should think what to do in a year, in 2 years, in 3 years. How to be prepared for more winters which are coming. So the answer is obvious. We should have more generating capacities, including renewables. So basically, what Ukraine needs today. So according to Ukrenergo information, and in the beginning we discussed that the amount of investments which we need, I would like to concentrate on the investments in renewable sector. So we need 12.8 billion euros of investments. So if to talk about capacities, we need 10 gigawatts of additional capacities, including 4 gigawatts of wind, 4 gigawatts of solar, 1 gigawatt of battery storages, and 3 gigawatts of other maneuvering capacities. The good news that basically there are projects which exist in Ukraine, and there are companies who may construct. We are one of them. Like we have constructed 114 megawatt capacities of wind last year, notwithstanding the war, which was our Telegulska wind farm. We are about to start the second stage, which is 400 megawatt, and additional 200 of megawatt of battery storages. And the good news that we are not the only one company. There are other companies who are also ready to construct. According to Ukrainian renewable associations, there are 4 gigawatt of ready-to-build capacities in Ukraine now. So there are a lot of players who are ready, but still we all as business face some obstacles. So we should think what obstacles exist basically and how to overcome them. First, I would like to talk about some positive, which instruments and which mechanisms exist in Ukraine to stimulate a renewable sector. First of all, auctions. And I will start with battery storages. Everybody heard that Ukrenergo in August this year announced auctions for 1 gigawatt of battery storages. And they're about to announce 200 megawatt in December. So I believe with these auctions, we will cover our need in battery storage capacities. If we talk about wind and solar and about production of electricity, we have green auctions. It's a good initiative, they exist, but they are not, let's say, enough, and they are not sufficient to cover our needs. Because if we are talking about additional 4 gigawatt of wind capacities, within 2-3 years, it means how much? 1.5 gigawatt per year. And green auctions will be approximately 100 megawatt are expected by this year, and 400, 500 next year. So it's obviously not enough. There are other, let's say, problem with the auctions. It's lack of trust towards guaranteed buyer. We all know that there are like quite significant debts toward renewable producers, energy producers. As of today, the debt of the guaranteed buyer towards the green energy sector is approximately 36 billion euros, including VAT. It's approximately 800 million euros. So the amount is quite substantial, which really brings financial institutions to the questions, okay, with battery storages and with green auctions, what repayment levels will be in the future, even if you participate and win these auctions. Another mechanism which exists in Ukraine, and it was introduced not a long time ago, is corporate PPA. It exists, but what is the problem with this mechanism? First of all, we have a lack of off-takers. By saying this, I mean that if you come to the off-take PPA agreement, you need an off-taker who will conclude an agreement with you for, let's say, 10, 12 years horizon. Because this is usual project lifetime if you come to wind or solar. And basically, your financing will be for this period. Unfortunately, due to the absence of the off-takers, this practice doesn't exist, and I believe that maximum what you can find in the market today is 1-2 years PPA due to the lack of the viable off-takers. Another mechanism which existed in Ukraine is feed-in tariff. Everybody knows about it, but unfortunately the new projects cannot benefit from this tariff anymore, only old projects. So basically, again, the question how to find a mechanism which will guarantee your price and your revenues during the project lifetime. Other obstacles and negative factors affecting the renewable energy industry, except the war, which is obvious. First of all, lack of equity insurance mechanism. So everybody understands that when investors come and finance projects, they expect certain return. And as well as finance institutions are searching for some guarantees, private investors are also searching for some equity guarantees. Currency restriction. It's also connected that any basically investor expects to return its investment. It's obvious. We have currency liberalization in Ukraine. Currently, it is possible to service ECA-covered debts and loans, and it is possible to distribute dividends 1 million euros per month. But obviously, when we are talking about 12.8 billions of euros, we understand the level of investments, and we understand the level of investments both from financial institutions and from private investors. Again, we will talk about old and current debts which exist for green electricity produced, and also insufficient tax incentives which we have. Why they are insufficient? For example, if we talk about battery storages, we have good incentive which is connected to the VAT exclusion for battery storage equipment. But when we talk about, let's say, wind turbines, this exclusion doesn't exist, so it would be nice to, let's say, follow the idea of battery storage equipment and to broaden it, and let's say to exclude wind turbines also from VAT. And as I mentioned, there are no viable off-takers, which is obvious. So what can we do in this situation? If we see all these obstacles, except what I mentioned. Basically, we as business understand that it is possible to construct, but the key question, how to attract financing. And one of the issue and another issue which we mention all the time is about off-take. So what to do, how to guarantee the off-take. Because when we receive certain amount of financing, the finance institutions expect the loan repayments. So basically, a solution which can be discussed, and as a concept I will comment now, which is currently discussed within business community, it can be a commercial risk guarantee fund or minimum price guarantee fund. What we mean by saying about this fund? So we mentioned today about guarantees, so we are looking from a little bit different perspective. We would like to invite also different participants, including business. So the idea of this fund, first of all, it will cover the difference between the DMA price and LCOE. It will ensure long-term offtake, which we discussed is lacking in Ukraine now. It will be founded by donors and international finance institutions, according to our concept, which will bring trustworthiness to this fund and basically possibility to manage it according to the best practices. So the idea is that the minimum price required, the guaranteed minimum price, will be set. It will be connected to the business itself. For example, for wind, we see it at the level of 65 euro per megawatt hour. How it will work? Let's say in a certain period of time, let's say 12 years horizon, how a usual financing tenor can be provided. And we imagine that in a certain year, wind capture price is above 65 euro. It means that the participating parties' projects in this fund replenish this fund, let's say with 3% of this margin. So this fund is replenished and it has sufficient funds for this lifetime. According to the forecast which we have now, wind capture price is forecasted around 80 euro megawatt hour, which means that in practice, this fund almost every year will receive replenishments rather than pay out. But let's imagine a year that wind capture price and DMA price goes below 65. So in this situation, the fund finances the projects parties with this difference. What it means for all the parties. In this situation, the participating projects are ensured that their cash flows are guaranteed and that they are able to repay their debts. The same as for basically finance party who give financing to these projects. They understand that the cash flows which they receive in the moment when they give financing are really guaranteed, and basically the business itself is participating in it. That it's not only somebody's aid, but also like viable business activity. What it may give for an IFI who may take leadership in this process. First of all, as I mentioned, according to the estimates, wind capture price will be higher. It will mean that in overall tenor, the fund will be profitable. So it may use these funds, I don't know, to earn additional profits, reinvest somewhere, and basically we believe it will be in line with strategy of IFIs which we have as of today. So this is like one of the mechanisms which I just wanted to comment. There may be like many other mechanisms which we can create, and I believe that my main message is that we should unite our efforts because there are a lot of obstacles and nobody by themselves cannot do anything with these obstacles. So we should create some alternative mechanisms in comparison to the existing ones and to cover those problems which we really have as the energy market as of today. So basically this is mainly from me. Thank you.
Yeah, thank you very much, and particularly for these practical recommendations. But before we move forward, maybe Charles, would you like to comment maybe your thoughts from financial engineering point of view, or maybe Vyacheslav or Peder would like to elaborate kind of reaction, because it's a call to action to IFIs, definitely, and yeah, just couple of thoughts.
Yes, on the IFI side, that's for my colleagues. Nevertheless, what I can say is that, yes, we've been doing in the past under the European Fund for Sustainable Development, first as a pilot, FMO was there, EBRD was there, a couple of other IFIs were there. That was the small envelope to really test it. Can we do guarantees in external action, you know? I mean, InvestEU and the Juncker plan, that's sort of the pioneers of external action on the European Union, but we wanted to do it outside of it. So we did. It was a success, and we've seen that the easiest way is to do the plain vanilla debt product guarantee. So you basically, an IFI does a loan for 20 years, it defaults in year 15. What's still left? Was it the first loss piece? Was it pari passu? We do the claim. That's the easiest way. That's the trigger event, is the default of the end beneficiary. Nevertheless, we can think of many other ways to use guarantees, many different products, many different intermediaries. As I mentioned this morning, the calls that are open are calls for public direct, and this is not an exclusivity of the EIB, which used to be the case under EFSD+. We have, and when I say public direct, I mean it's public, so the sovereign, but it's also sub-sovereign non-commercial. Then you have private direct, and private direct that is sub-sovereign commercial and also private companies. And then where there is the most flexibility probably and the most, I would say, creativity for engineering, that is for the intermediated funds for equity. we can discuss about that later, maybe in other contexts. But what I can tell you is that already in this third one, the trigger event is not debt. It's not a default on debt. The trigger event is a fair value in year 18 that shows that basically the contribution that was done by the IFI is not the same as what you have at the end. And so doing funds and having trigger events that are basically the breach of a floor price, that can be something. I'm not saying it's going to be the case, but that can be pitched and that can be elaborated. And I mean, at the end of the day, it's not because we have guarantees agreements that were drafted by lawyers for standard debt products that those same lawyers cannot think outside of the box when we say that policy-wise this is making sense and financial engineering-wise this is making sense. The policy is driving the way on the Ukraine facility. We are restricted by financial means, but we have quite some firepower. But it is really the policy that is driving the way. So if you say to see those green fields of Ukraine with really having those solar panels and those renewables and even hydro energy that really gets more, if you say that what is needed is that kind of mechanism, and if you make the plea about that, and if you can have the entire value chain that comes with that, with a coordinated approach, we will find a way to get a mechanism and to get actually a guarantee product that works on that. Thank you.
Yeah, thank you a lot. And regarding these calls, there are two deadlines in this call, right? And the one is tomorrow, and the second one.
So how does it work? So we basically did this 1.4 after Berlin, at Berlin actually, signed by all presidents for some of the guarantee agreements. So that was 900 million, close to 1 billion actually of guarantees. So the mechanisms that I showed. And then there was 500 million that was basically about investment grants, technical assistance, blended finance. So we're not only doing grants, and even when people speak about grants, speaking about EU money, it's not always grants. Sometimes it is about, okay, you want to set up a fund, you want one of the LPs to be a partnering financial institution, but that partnering financial institution doesn't have the means to do it. Well, we can potentially consider to be an LP, to be a limited partner, going through that implementing partner. So just to say that those are the kind of instruments we can do. So 1.4, signed in Berlin. That was for existing existing projects. So those projects existed with other geographies. We basically said, okay, the Ukraine facility is open. Do you want to extend those projects purely for Ukraine with a new envelope? Most of the people said, yes, sure, we want. And that's how we managed to sign so fast the 1.4. But then we said, okay, let's be really open here and let's do an open architecture call. And this is what we tried to draft in the summer, what we presented to the member states with support end of September. And on the 25th of September, we basically managed to launch this new call, 12 months, as I said, private direct, public direct, private direct, and fund intermediate, 2.75, 2.2 of guarantees, and 550, I think, of grants. Again, grants, not purely grants. But this is to say that this is now to be applied for. There was a first window that will end on the 31st of October, but this is just a sort of internal thing for us in order to group the proposals at that moment, assess them in batch, and present them to the member states in batch in early 2025, and then try to contract as fast as possible. Nevertheless, in the next 11 months, there will be other cutoff dates, and people will come with projects to us, and they can submit to us between different cutoff dates, at the end of some cutoff dates, and we really have a very dynamic feedback loop. But we also have very stringent processes when it comes to indirect management and to basically speak with our member states. And this is why we have the cutoff dates.
Okay.
There will be a call on banking as well, also interesting. This is a call that will be launched soon, and we're aiming to 1.2, 1.4 billion figure. Voila. But this is not the end of the Ukraine investment framework, because we also left a bit of firepower on the side for after the 12 months. because I mean the needs for Ukraine are going to be for the foreseeable future, and we do not want a rush by spending the money. We want to actually have the best projects in the pipeline, shovel ready, bankable when possible, and try to support these ones.
Yeah, great, and appreciate for this comprehensive explanation. And Vyacheslav, Peder, would like to reflect on later during the presentation. Yeah, okay, great. So, and usually between business and funds, lawyers do a lot of work, right? And Oleksandr, I would like to ask you about your experience and to maybe to kind of make summary of your huge experience doing due diligence and of different deals during the war, and maybe you can explain about what is a bankable project actually is, and how to prepare an investment project for finance.
Yep.
Yeah.
Thank you very much, Alexander. Yep. We as the lawyers have a privilege to work with a lot of different projects in renewables, and recently we had several projects for attracting financing to renewable projects at ready-to-build stages. And of course, business often faces a lot of obstacles, which was mentioned by Polina, but we try to focus on positive. And we see that it's developing and becoming more and more accessible for business, I believe. So I would like to start with some financing figures. I will not dive deep in this and explain everything. So roughly the amounts I could have gathered. But what I want to underline that recently Ukrainian banks and foreign banks, they started more likely to finance renewable projects. And for example, only from this summer, Ukrainian banks provided more than 4.3 billion Ukrainian hryvnias to renewable energy projects, and also foreign banks provided 2.4. But what's more interesting is that currently there are pending applications for financing for more than 42 billion hryvnias. So, and I think that this development, of course, what is launched by some positive changes in legislation. It's about what Polina mentioned in previous presentations. Of course, it's not enough, but again, these changes, they let some foundation for development of the sector, because a few years ago we didn't have this, and the regulation of currency restrictions, they already at place, loan repayments and repatriation of dividends, at least we have at this level this. Simplified permitted procedures in construction. Tax incentives, for example, for import of energy equipment. Corporate PPAs, they launched, although they do not provide all the possibilities now. Launch of guarantees of origin, biomethane exports, green auctions, ancillary services auctions. And in parallel to this, we see that financial institutions are more active. Ukraine got Ukraine facility. Major Ukrainian banks signed a memo on preferential lending for energy sector. So the main goal of this memo is to provide this lending for renewables again. The government has approved the credit development strategy. And one of the main goals of this strategy is recovery. So all of these are positive signals for both investors and financial and business. And what we have now is, from one hand, we have huge demand in new projects. We have a lot of new projects being developed and huge demand in financing. On the other hand, we have IFIs, we have lenders who want and willing to finance this project, and they are all trying to find the point of contact, and this point is bankability of the project. And in simple terms, in this in mind, the question occurs, what is bankability? Everybody knows this, but just like to make sure. So bankability is a criteria which financial institutions use to understand whether the project is worth for financing and whether it will deliver back the capital. And it comprises several criteria. First and foremost is a strong financial model. Of course, each lender wants to make sure that your project will generate enough revenue not only for covering operational expenses but also to repay debt. And it shall be supplemented by secured revenue. It's something like PPA or other long-term contract which will secure long-term revenue and secured off-taker. Banks will also look into your team, into your expertise. Do you have already such a projects implemented in this area? Do you work with this kind of technology? Do you have good contractors? All this matters. Again, risk mitigation. Lenders want to make sure that all risks are mitigated properly. So we have construction risks, operational risks, we have war risks, and so on. And transparent structure. You shall not be tied with Russia, of course, or other blacklisted countries if you want to get financing. So in this regard, I would like to move further and talk about how to prove your bankability. Of course, this list of points that you can see on the slide, it's from our practical experience of interacting with Ukrainian banks mostly, and it shows like ideal model when you shall present everything, and we will go through. So basically, the simple answer to how to prove bankability is present comprehensive documents. In terms of financial information, you will need to have a thorough business plan supplemented by financial statements. You shall disclose clear income structure, show the main contracts which will generate revenue. Also should take into account that some of the lenders, they have their own requirements to what shall be included to this business plan. Another important point is collateral. Besides of the pledge of the project itself, bank or other lender will seek for other collateral, and it can be something like suretyship, parent company guarantees, it can be a mortgage or pledge of shares of deliverables under some contracts, so on. So here the bank will look also not only on the collateral but creditworthiness of the suretyship. You will need to present evaluation reports, comprehensive documents proving ownership, and so on. In terms of corporate documents, each borrower shall have, of course, standard set of documents, but here is important thing, it's up-to-date ownership structure. Ukraine currently has special strict regulations on how business shall disclose their corporate structure, and it shall be up to date. So make sure that you have reflected all your structure properly and timely. Permits and compliance with regulatory aspects is one of the major issues for renewable energy projects, of course. The lender wants to make sure that you are ready to smoothly operate on each stage of the lifespan of the project. So if we speak about ready-to-build stage, you shall secure construction permits, your contractor shall have respective licenses, you shall pass the environmental impact assessment, you shall have proper grid connection agreement, and so on. Property and technical aspect also very important. In terms of property, ready-to-build stage projects, you need to have a land plot. It shall be allocated legally, it shall have proper purpose, and you shall have access to it. Bank will take close view and make its own due diligence of whether you have a legitimate right of lease or maybe ownership, and whether you have good validity term of the lease contract for the project and so on. They will ask for geological surveys to make sure that the project you are planning to put here is suitable for this location. Technical documents, again, in addition to legal due diligence, banks usually ask for some third-party technical review of your project design documentation, regardless of the fact whether it shall pass compulsory state expertise. They will ask for additional expertise of your project design documentation. You shall have feasibility study, technical conditions for the land plot, town planning conditions and limitations. All shall be in place, all shall be not outdated and shall not contradict itself. Agreements, we mean that, again, you shall demonstrate that your project has closed all its needs, and if it's not possible by own resources, you shall involve experienced contractor. It's experienced EPC contractor. Bank will check whether your EPC contractor already done such kind of project. They will ask for supply contracts and ask you how you will manage all the matters which will occur during operation of your project, how you will treat water, what about waste management. So from one point, you can either provide O&M contractor who will cover all these matters, or you will need to present document that prove that you already secured these questions. And speaking about agreements, PPA here, it's one of the important roles. Of course, we have problems with off-takers, but again, it's possible, and bank will ask for this. They still want to see the stable revenue and projection, how you will generate it. So in terms of PPA, its existence is not enough. So banks will look on validity term, pricing structure, guarantees, and check the off-taker, whether this off-taker will be capable to fully comply with the agreement. And currently, ESG requirements becoming more and more important in Ukraine, although we do not have special regulation for this, and companies are not required to prepare reporting, but lenders looking for the borrowers who contributing to sustainable goals. They will check whether you have ESG policy, labor policies, other ethical standards. You will have to be ready to provide answers and provide proofs whether do you have certification of quality management, does your project affect rare animals or cultural heritage, does your project affect native people, what about waste management, air pollution, and so on. So of course this list of documents and list of information is not sufficient and not exhaustive. Sorry, and of course your project at certain stage may not have all these documents in place. But at the moment of your application, you shall present maximum of which is available and provide clear vision of how you will provide all the other, or how you will manage all the other matters which are necessary. So that's it. Thank you.
Thank you, Alexander. That's it, but it's, as far as I understand, it's not the final list of what should be done, yeah, and if I can say more, what should be done, and to make the project really bankable. And Vyacheslav, the floor is yours. Could you elaborate more about financial opportunity for bankable projects, and particularly what instrument do you have on the tables, and what you risk identified during your kind of work, and how to resolve them?
I thought after an hour of sitting, maybe
But jump a little bit.
might as well use the opportunity. Yeah, for those of you in the room who may not know IFC, we are part of the World Bank Group, and we are the largest global developmental finance institution focusing specifically on private sector. So we're not in the business of lending per se to Ukrenergo or state sector. We are lending or investing into private companies. Since 2022, our board has endorsed a $2 billion program to support Ukraine. We call it the Ukraine Economic Resilience Action. Now, the idea for that is we're going to use $1 billion of our own balance sheet capital. Another $1 billion was to be raised from donors. And we are making great progress on that other half. And Charles here and European Commission is our largest contributor to the blended finance support, without which we wouldn't be able to continue doing what we are doing in Ukraine. Initially, now having that program to deliver, we started with short-term capital, working capital facilities, liquidity support to help our clients. Gradually over time, and right now pretty much the focus is on long-term lending, CapEx, so like clearly an angle for infrastructure investing, which I am part of the infrastructure team, and energy is about 50% of the business that we do in the region. Our strategy was pretty much calibrated around wind, solar, battery storage. The idea was, let's try and look at projects which could be distributed over larger territory. So we use the word distributed more than decentralized. In a sense, our feeling from the government was that they would rather want to have things centralized from operations like dispatcher and control point of view, but they want them spread it over larger territories, harder to hit. So that was the logic for our investment strategy in Ukraine. So with that in mind, and with the idea, what can we do immediately in the energy sector to help prepare for this winter? For instance, we did a couple of risk-sharing facilities where we basically provide guarantees to local banks so that companies in Ukraine can have access to financing to procure energy equipment, PVs, batteries, installation, container-based energy solutions. So that's already ongoing. Hopefully before the end of this year, people can already benefit from that facility. It will be available to not one, but pretty much all the banks we work with in the country. More than medium term, we have developed a pipeline of projects, of which the largest two transactions are wind projects. We are currently, I think it's about $370 million in terms of our investment that's been in works right now for these two wind transactions. We want to also engage in the battery energy storage space. We've spent a bit of time looking into the sector with two international companies which were willing to invest. Both of the clients decided not to participate in the FCR and FRR auctions which Ukrenergo held, so for that reason we couldn't also work alongside with them, but I hope maybe in the next iterations of this battery storage auction we can find an angle to engage. This is clearly what we see between wind and batteries, what Ukraine needs from the technology perspective most of all. Yes, and then Alex, you asked me to maybe share a little bit some of the challenges and how we work around them, and there were a lot of things said already, so I'm trying to change my notes on the go a little bit. Maybe let me start by saying that first and foremost, we need a client, someone who's capable, who is experienced, who is willing to do something in Ukraine. Without that, nothing's gonna happen. And I'm glad to see local sponsors in Ukraine who are doing things and showing to the rest of the world that it's possible. We also have requests from a number of international companies there is not a long waiting list of players willing to come in, you know. So it's important the few ones that we have that we are able to showcase success story, you know, and to have a number of projects completed. There is recently a trend that a lot of companies without any prior experience in the renewables or in the energy sector, you see Epicenter, Nova Poshta, you see Galnaftagaz, others moving into the renewable space, which presents another challenge. You know, normally on the banker side, you want to see someone who has built and operated such type of asset. This is not that easy. But I'm glad we have the tools in place, and with donor support, we don't shy away from such cases. And also to the point which colleague from the EuroCape made, we actually have a toolkit in place in IFC which is for pre-investment support of projects. So we can engage with developers or with, you know, sponsors for projects which are not yet ready for financing. And we have two instruments. One is called collaboration, where we can cost share, say, an ESG, environmental and social study or something that could help move that and make it bankable later on.
It's not advisory, right?
It is an advisory product, but it's it can get towards an investment side with the second product, which is a co-development, where we can invest up to 8 million euro in early stage developments. Essentially later, you know, trying to get an equity stake in the project or be paid a developer fee and just walk away, not to complicate things. So these are tools that are available in our pipeline and which kind of differentiate us from other institutions who don't offer the same instruments. So I just wanted to mention it for the benefit of the developers and investors in the room. Secondly, I think nothing's going to happen without the continued donor support. But I just wanted to comment that maybe I'm lucky because in IFC we have a dedicated team that's raising donor money and dealing with relationships with our donor partners. So my job is done more on the transaction side. I have the benefit, you know, of worrying less about that piece. I have the trust that our, you know, team does a fantastic job with that. So my worry is we need clients, we need projects to really, you know, use to the best of our ability these donor facilities, which aren't really available many places in the world. So I think it's, with all the challenges in Ukraine, I really want, you know, the investors to have a mentality in a sense. What do we need in order to make this work? You know, where is the gap? Let's go and talk to the DFIs early on and see if we can engineer a solution, because they have access to all of these different donor support programs, which were never, you know, available in Ukraine in the past. So, and I'm glad that in some cases we are even able to propose terms which were comparable to what we've been proposing pre-war. So that's the kind of impact which this blended finance or donor support has in Ukraine. On the longer term sort of perspective, and Polina mentioned this as well. Look, there is no bankable offtake arrangement in the country. I just want to explain that the two wind projects we're working on right now, we will be accepting pretty much all of the merchant risk. So that's something other DFI partners, you know, weren't prepared to do. So we understand we're not going to be able to continue to do that for a, you know, a longer horizon, but we want to make a couple of catalytic investments to support the country already. It's challenging. It requires a lot of sort of sensitivity analysis, price forecasting, etc., etc. So one of the idea which Polina suggests is definitely one of the mechanisms that we also had in mind, and we keep coordinating with other stakeholders. There is a program which we are implementing with World Bank called Renew, which is essentially in cooperation with the government. How can we fix the problems which can then open up the sector for a longer term horizon? And, you know, needless to say, the elephant in the room is the end-user tariffs, which are far from system cost recovery still, and there is a long way to go. The arrears accumulated to existing renewable producers, is another issue, but I put those in the bucket, which we can try and resolve through policy dialogue and working together with the World Bank and other stakeholders. I don't know. Let me stop there and see what else we can.
Yeah, definitely, Vyacheslav. Thank you. Thank you. As the time is running, but I would love to hear another perspectives from export credit agency, and it would be great if, Peder, you elaborate more about your financial instruments you would like to propose to the markets, and what is your project pipeline in Ukraine actually?
Yes. Is it working? Yeah, it's working. So I will also stand up after having been sitting for around 1 hour and 20 minutes now. So sorry for you guys, and you will have to listen to me. So I'm the master of the clock now, so you're in my hands. No, but I promise to let you go early. But still, though, I would like to tell you a bit about our IFO's journey within Ukraine and what we have been doing the past 14 months, because we have actually been very busy, and today we have heard about a lot of projects. And I would like to take you a bit deeper into some of the projects that we have made. And it is difficult. We all know that here in the room, but it's also possible. So I would like to give you that message. It's difficult, but possible. Just iPhone brief, we are the Danish promotional bank, which means that we are a bank and we are here to take greater risk than normal banks. That's our job and that's what we're here for. But we're not only a national promotional bank, we also the ECA of Denmark, and that's by that meaning ECA is Export Credit Agency, and that means that we support Danish exporters when they go abroad. So that's basically the program that we are implementing right now in Ukraine. And of course, due to the situation that we all know here, normally Ukraine would be a country off cover, no doubt about that. But the government, the Danish government, decided that they wanted us to be there, and they did that by giving us additional funds and say, go spend these funds in Ukraine, but do it on a normal basis. So what they have given us additional funds to use in Ukraine, but they have said to us, but do it with the normal tactics. And can you do that? I mean, because Ukraine is at war. So no, we cannot, but we can try to. And Polina, you know, you have been dealing with us. So you know we are stubborn guys, and we're glad to work together with you. But we are in a difficult situation, you and us, but we need to negotiate on commercial terms. And that's really how we work. Okay, so that's a bit about IFO, and I think we skip this one. But this is just to say that we have 3 legs, so to say. We can support Danish companies with investments. We can support Danish companies with loan, working capitals, and guarantees. And then we can support them when they go abroad. And basically, that's the program that I will use today and talk about. That is what we're doing basically in Ukraine right now. And as I said before, the Danish government said about 1.5 years, they decided to spend 130 million euros in Ukraine. That's a small amount. You can't get a wind farm for that. So that's a really small amount. But on the other hand, the government told us, go do some rebuilding for this. And then we will support the Ukraine military with a lot more than 130 million. So what the Danish government have done is that they're giving a lot of funds, much more than 130 million. But that is go for the military, and then they have to IFO given us 130 million to go spend. And that's really not much. But that is what we normally do. We also do guarantees. And by guaranteeing, as you explained very well before, you can gearing up. But that has been not so much the case in Ukraine, because we have been pretty much alone there. So I'm really glad to hear and meet you guys here today. I know that you are there and that you're coming in, and that's good, because basically what we have been looking for the past year is partners. Because when we're going into projects like Chulkov, we do not like to be the only lender, but that's the case basically here. You could say we're the only risk taker. And if we are to achieve that pipeline that we have been discussing all morning, we need to find, you could say, more partners, because you could see with the small amount, I started off with 130 million. Now it has increased to something like 380 million. But that's still not enough for one wind farm. And therefore we have, when we made Chulkov, we were giving more funds so we could support Chulkov also. But it's just to say, the message here is that we need to bring more banks and institutions there to Ukraine. And we are there to support, because basically we are support instrument, IFO, by issuing guaranteeing, as we discussed this morning, or afternoon, sorry, there's many ways to do it. And we are happy to be there. We have two programs. We have one for the public sector and one for the commercial sector. And for the public sector, we are able to say we can also come with a grant of 40% if we're issuing a loan to a public sector company. And we have done that, but it has been really difficult to find partners in the public sector, because they are not allowed to increase their spendings, of course not. But so we are still, so even though that we are coming with a grant of 40%, it has been difficult. Right now, we are actually working together with Mykhailo municipality about a very, very small project, only 1 million euros. But if we can do this project, and I believe strongly we can, then we can hopefully take that model and enlarge it a little bit. So that we are really looking forward to, and yeah, hopefully at the end of the month we will be able to close that project. Small project, but it gives us hope. Then for the private sector, there's no possibility for doing grants, but we do projects. And the past year we have, so to speak, been alone, because normally we like to work together with other IFIs, DFIs, private banks, but we have not been able to track anyone. So therefore we have been doing loans on our own. And it has been difficult, because we had to develop a loan program within the past 12 months. We had to find transactions, we had to develop a loan program, and we had to do due diligence on transactions. So I would say that we have been busy. So to sum up, we have a program, a small program, and we are active in Ukraine as you guys are here. And this is just to brag, this is just to say, yeah, we have done 11 transactions. It does not sound so much, but when you recalculating what we heard, what I said before, we actually started up 1 year ago, and we had a lot of implementation on the road. Then we're really happy to say that we have been closing 11 transactions, and yeah, that's basically where we are. Just to say, where are we right now in Ukraine? I think I can say we are all over. We are in the energy sector together with DTEK. We are in water and wastewater treatment. We are especially active in the agriculture sector, in the maritime sector. So I would say the picture is broader, and today we should be focused on energy and yes, especially energy and wind. That is our specialty at IFO, because coming from Denmark, we have two larger companies that's producing wind turbines. So we are particularly focused at wind, of course. And having said wind, Polina, I think you nailed it when you said that we need to figure out how make sure that we have some PPAs that is bankable. And we heard also your presentation about what makes a project bankable. My experience right now is that the requirements you said, I completely agree with them. But if I have to follow all of them, it will be very difficult for me to be in Ukraine. So I need to find out which of these can I live without. And that would differ from project to project, but and that takes time to find out how to do it. But I guess that's what needed right now. And that's why, of course, we appreciate to work with experienced sponsors. I think your point before, saying that we see sponsors coming in, they have money, but they don't have the experience, that DTEK certainly have the experience, and that we take a lot of comfort in that. But together, but also to, of course, having local sponsors, I think that's a huge advantage. And then they maybe don't have the experience of being very experienced in wind. Yes, so be it. I heard you said the same. Yeah, so I guess my message today is that it is difficult but possible, and we need to find a way. And Polina, you suggested a way before how we could maybe see a PPA scheme. And I know that the World Bank and IFC have worked, because I've worked a lot in Argentina. And there, they also formed a program which I have looked into, because could that be interesting? Some of it, I think some of that program, the Renewables program they used there, could also be complemented with you, could beef up maybe a little bit. So there are solutions, definitely. And we need to be creative to get through it. And of course, the elephant in the room is also when can we expect a more normal conditions? And none of us have that answer right yet. But until then, we will maybe not be working at the high level, but can we work at least at a decent level? Then it's much better than nothing. And when I meet people from Ukraine, I hear and that you also appreciate that you can see some kind of normality, that we are doing wind farms and sewers and agriculture or whatever. So yeah, let me be the closing remark.
Yeah, great, thank you. Thank you very much. And we have just 2 minutes left, and maybe someone would like to ask something. If not, okay, please.
Thank you. We were talking about banks intermediaries. We were talking about ESG component, which is a part of each due diligence project when any private investor would like to get some financing. And my question probably to those who provide money to banks intermediaries. First of all, have you assessed whether they have internal capacity to do this environmental and social risk assessment? Because my company is dealing with different intermediary banks and with international banks. And what we have admitted that these risk assessment methodologies and procedures, they are not commonly present in all intermediary banks. So just how you are going to address such things, because for big companies, it's not a big challenge to approach big banks directly, like EBRD, IFC, and so on. But what about small scale projects? Usually they will be readdressed to intermediary banks. So what about risk assessment, environmental social risk assessment? Sorry, my name is Oksana. I represent Center for Environmental Consulting and Auditing in Ukraine, Kyiv. Thank you.
I don't have an answer for you. Just the way we are organized is that I work on large infrastructure projects directly, and then there is a separate group working on banks. Having been present in a couple of sort of due diligence and appraisal projects with local financial institutions, there is an ESG sort of conversation to be held, but I can imagine it's a lot of complexity to then expect, you know, to honestly speaking, my feeling is it's not going to be as strict as we do it on the bilateral projects. Just the fact that it's too complicated to, especially in the SMEs, where majority of these FI facilities are tailored right now. I think they are far from, you know, compliance with our ENS requirements as compared to, say, a large transaction. And also in those projects, they're not really complicated construction projects, right? So in that sense, it's about procurement of energy equipment. So they are on the sort of ENS risk scale, probably are on the lower range. They don't have to do maybe some high voltage transmission line, you know, equipment and things like that. So I would expect they are simpler and probably there are easier ENS requirements on the intermediary level. But I can try and explore that for you. If you can leave me your card, we can circle back. Thank you.
I would say from an ECA perspective, we have the same requirements. And it is right, when we're looking at the big projects, the ENS, for instance, the studies that you need to do there, they're quite comprehensive. And I think Polina will agree with that. But of course, for the smaller projects, less demands. The way we have solved it is that we have actually, for the project that we engaged with, we have our own ENS consultant, and he's actually, so far, have been visiting all the projects that we are looking at. And of course, the smaller one, less requirements, and for the larger one, much more, of course. So, yeah. I can say for IFO, we're not willing to compromise. I mean, you could say on the credit risk, we may be willing to compromise, but not on the ENS risk. Basically because we are representing the government of Denmark, and if we are screwing up in ENS requirements, it falls back to our government, and then I lose my job. So yeah.
Oh,
yeah. Hello.
And
My name is Grigory Mazur. Our company is a EPC contractor or general contractor of building biogas station in Ukraine. Yeah. Right now we build the second biogas station in Ukraine. We start this project in January, February next year, and a middle project is approximately 10-15 million euro. Yeah. So the questions for the Mr. Larsen. Yeah. Do you interested in the financial biogas industry in Ukraine? We have approximately 60% of Germany equipment and Germany builders, etc.
And it's a really good question, and there's I would say that we are looking at biogas projects in Ukraine because we have manufacturers in Denmark, and maybe I forgot to say that, but there's only one precondition for me being in Ukraine. That is that there needs to be a Danish supplier also. So if there's a Danish supplier. And to make it very simple, for me to participate, if you have a project of 10 million and you would like me to finance 10 million, then 30%, 3 million, needs to be Danish.
Colleagues, as far as I see, the time is over, and you would like to add something? Yeah.
I wanted to say that, of course, Denmark is one of the stellar 27 member states, but there's many other member states that also have foothold with their ECAs in Ukraine. And there's a fantastic program that is not launched by DG NIR, but I'm still promoting it, which is done by DG GROW. So this is industrial policy, entrepreneurship, and single market. It's one of those legacy, very important DGs in the Commission. And they've launched the InvestEU Export Credit Facility. And that's a 300 million program that they do with the EIF, where basically national ECAs of the member states can actually submit proposals to the EIF to then have new firepower for the national ECAs. And I just wanted to promote that because, I mean, you spoke about your German supplier. There's many other European companies that still have manufacturing power to share with Ukrainians, and that's a fantastic program that can definitely support that. We can support projects as well in that kind of sphere. Nevertheless, on the 2.75 billion, we can only get submissions from eligible financial institutions, and we can only get them above 20 million. And what we like most is a portfolio approach. So if you want to label it greenest fields of Ukraine and you want to do 10 projects, that's fantastic. If you have only one project of 15 million, that we can probably not follow you.
Yeah, great. And so our conversation never ended, and it means that money flow and financial opportunity are on the table. So the question is bankable projects. It's kind of my conclusion. So please go to lawyers, go to your advisors, prepare a bankable project, apply to IFIs, and make deals. And thank you for your participation. Thank you, speakers, for your really good insights and your insightful thoughts and contributions. Thank you very much.
Thank you.
We discussed hours ago, and you did it. And it's amazing speed of European Commission.